Here's one thing I'll share, a money insight I'll share is that I think diversification is not a way to build wealth. Too many financial people out there talk about diversification, like multiple streams of income. I actually think that's foolish until you already are wealthy. Concentration builds wealth, and diversification preserves wealth.
Startups with Stu is a podcast for anyone living or wanting to live the startup life, either as a founder or a team member. Your host, Stuart Draper, was a 9-time Inc. 5000 honoree before age 40. This show dives deep into the exhilarating world of entrepreneurship with guests that are seeking advice from Stu for their startup or business owners that want to share their entrepreneurial journey. Listeners always walk away with actionable ideas of what to do to take their startup to the moon. Startup life can feel like a roller coaster ride. And with Startups with Stu, you're likely to turn your roller coaster ride into a rocket ship ride. Get ready to uncover the secrets to startup success from visionary founders and savvy investors who've transformed groundbreaking ideas into thriving ventures.
This episode is brought to you today by PodUp. PodUp.com is the leading all-in-one AI-powered podcasting software. If you've ever considered having a podcast, want to get started, go to PodUp.com and check it out. Ladies and gentlemen, thank you so much for joining another episode of Startups with Stu, where we talk about taking your startup to the moon and bring on incredible founders that are just getting started or that have already been there and done that, or that are building something big and already having success. Today with us, we have Mr. Chad Willardson of Pacific Capital. Chad, good to have you today.
It's great to be here. Thank you.
Thank you for being here. And you are not alone. I should say we are not alone. This is a live recording. We've got an audience for you today, and you can see yourself on screen. There you are.
Oh, wow. Love it.
So we're watching you from the wall there. Chad, how many years with Pacific Capital? When did you get started?
Yeah, I started actually working at Merrill Lynch in wealth management in 2003. I started at Wasatch Advisors internship with my cousin while I was in college, and then moved back down to Southern California. Merrill Lynch 2003 to 2011, and then started Pacific Capital in 2011.
2011. So you're going on 15 years now celebrated? 14.
Yeah, almost 14 years. Yeah, this year.
That is so awesome. Was it always easy from day one in 2011, just up and to the right, the chart?
Definitely not. I mean, when I left, for me, it was scary because I was leaving a big known brand. Like Merrill Lynch was on every commercial, it was on ESPN, it was on like the home run fence for Major League Baseball, and it was just a brand that everyone knew. But I had just grown sick and tired of working for the big Wall Street bank, and so it was definitely a grind in the beginning. I mean, it was a grind at Merrill Lynch, building up a clientele. And starting over was definitely a challenge. Most of my inner circle actually advised against it. Most people thought it was a bad idea. You're young, I don't know, I was 30 or 31. You're like, you have all this opportunity and you're going to start all over and leave Merrill Lynch. And it didn't seem like a great idea to most people. And so that was it was a challenge. Definitely was a challenge.
If you're okay sharing, what was the step down in pay in that first year?
Yeah. Well, my last year at Merrill Lynch, I think I earned around like 1.4 million, and I was getting offers of 3 to 6 million to like a recruitment bonus package where you'd leave and go to Goldman Sachs or Morgan Stanley or UBS, and they would pay you 2 to 4 times what your previous 12 months was. And then you'd have to basically sign that you would stay there for 7 to 9 years. And that was tempting because most of my friends, that's what they were doing. And it was a big payday. And I actually did not tell my wife about those offers because I knew what her answer would have been. She would have said, it's time to go to these places. And I did not talk to her about that because I thought, I don't feel like that's a long-term move for me. And I didn't want to like bounce around. I saw my friends bouncing around and getting, it's just like, to me, it was like switching prison cells and just changing the color of my uniform. And I just wanted to have freedom. And so I started over and I just said, I think in the first year, maybe I earned, I'd have to go back, but definitely like net, I'm going to say is definitely less than like 300,000, maybe.
A slight drop of $1 million
Yeah.
a year, basically.
Yeah,
Yeah.
just a slight drop. Yeah. It was probably a 70% drop. And I just had expenses and I didn't know what I was doing either. Like I was not a professional entrepreneur by any stretch. So I had not hired people. I had not negotiated leases or bought office equipment or just, done all those kinds of things. And so it was definitely brand new for me back then.
So has your product offering, your service offering evolved over the years?
Drastically. Yeah, it's drastically evolved. I knew I wanted to only serve entrepreneurs. And so when I left, I basically said, I'm going to build a company that is completely molded around what an entrepreneur wants. And eventually led to my fifth book talking about how entrepreneurs are just wired differently. And everything we do needs to serve that visionary, risk taking ADHD entrepreneur that wants to start all these things. Right. So that was like, but as far as like who we worked with and what we could do for them, definitely evolved. I mean, we served entrepreneurs from day one, and we've just basically elevated the level of entrepreneurs that we work with and the tax, more complicated planning for tax stuff. Most of our clients, like we book their vacations for them. So that's the stuff I couldn't offer in the beginning. We didn't have the resources or the depth on our team. So yeah, we've really evolved into serving a lot more of the holistic entrepreneur's lifestyle and the inner circle around them. Like some people on my team will get on interviews and help interview a CFO or a COO or an EA, just a great executive assistant for our clients, and we'll be involved in that process. So we're just a lot deeper in the relationships than we used to be, and we work with a higher level of client.
Okay. That's so cool. So what was it like for your wife in that year of you saying, okay, I'm going from 1.4 down to 300 to get this thing going?
As long as there's enough money to swipe the card now and again, like she's fine. She's not high maintenance. She shops at Ross, so we're good. She's not a big spender, but I mean, it was definitely a grind as far as hours worked because I was working way more hours when I started my own business than when I was like at the end of my 9 years at Merrill Lynch. So it was more of like that demand was different than the hustle had to increase a lot. And I don't know that she noticed too much on the money side other than I said, hey, for the next couple of years, like I've got to build this. And so we're going to be focused on building this.
So there's the sacrifice financially for your spouse. Then there's also the sacrifice of your time. Was that
Yeah.
hard? Were those hard years getting things going?
Yeah, that's definitely a challenge. And I made good hires. I made some not so great hires. Like I learned lessons, but in the end, I wouldn't go back and change anything. I learned a lot in those first few years of how to do what I'm doing. I think I like to think I'm learning and getting better each year at what I'm doing as a leader. So it's gotten better.
So I have a new episode that went live this week, the week of our recording, and that's with Curtis Matsko. He is a LinkedIn influencer like yourself, and he has grown Portland Leather Goods from zero to coming up on 200 million is what they project for 2025. Selling leather goods, right? And
That's awesome.
the way that he and I connected was he wrote this post, okay, about how someone said, well, when are you going to get your private jet? And he like took offense that they would like presume that he would ever have the gall to buy himself a private jet. And, I've done some private charters. I've never bought my own private jet, but I know you have, and you've talked about it on your LinkedIn. I'd love for you to share with Beth how you think about why a private jet is right for you.
Yeah. So for me, it was never on my goal list. I didn't know much about it. I'd actually never gone on a private flight in my life until I took my first flight with the plane I bought. I didn't test drive it, if you will. Like I didn't know what I was doing. I was so frustrated during COVID travel. People yelling at me to pull my mask up and like just all the crap I dealt with the travel that I said, I can't do this anymore. Like, I can't do this. I'm gonna lose my mind. And out of that, I said, there's got to be a better way. Like, there's no way super wealthy, successful people are putting up with all this crap at the airports. And so I just started calling clients, started calling around. And one thing led to another. And it was a pretty quick thing that I did. And we just told the story. It's funny. We got back like 2 a.m. This morning. We went to Hawaii with the big like BYU sports donor group. And some of them asked me to share they asked me and my wife to share about that. And my wife told the story of how she found out. It was, the plane was in Nashville, and that's where I was going to pick it up from. And she saw on my calendar that I was flying to Nashville at like 5 a.m. the next day. And she was like, I didn't have to, this probably doesn't sound good, but I was so nervous to tell her. And, I was like, I'm really going to get in trouble for making this purchase. This is a big purchase. And I kept putting it off, and I kept putting it off. And finally, it was the night before. I was like, I don't know how I'm going to, I was waiting for the perfect time. There was no perfect time. And she goes, hey, by the way, why are you going to Nashville tomorrow morning? And I was like, I bought a plane. And as soon as I said it, I'm like, I am in such trouble. And she goes, really? I said, yeah. And she goes, can it go to Hawaii? And I said, not quite. It's not quite big enough. And she goes, well, that sounds stupid. And I sat there for a minute, and I was like, I don't know if she's happy or mad. Like, I'm not really sure. And she's like, if you're going to do it, like, do it right. And I was like, holy cow. I'm like, you don't know how much these cost. And she's like, I know, but you can't even go to Hawaii. And I was like, all right. So my immediate goal was to upgrade right away. And within a year I did. So now I'm glad, happy to say we can fly to Hawaii. But for me, it's a time machine. That's what it is. It's a time machine. You cannot justify the cost and say, oh, well, if you fly this much, it makes sense. It doesn't make sense financially. It's expensive. But it's a time machine. Like, I can go to a client meeting in Utah, a client meeting in Texas, and be home for my kids' basketball game the same day. And before, that would have been an overnight stay. It would have been waiting at the airports. It would have been delays and all these things. I can also bring like 3 or 4 team members for a really big meeting, and it's really convenient to bring my team along.
For them, it's a perk, right? That's like a fun.
Oh, it's a huge perk. Oh yeah, for sure. Yeah. It's a great thing to, we'll take clients to certain things, and it really is just more for flexibility and convenience. That's the way I look at it. It's way more expensive to use and maintain than I ever imagined. I think buying a plane is not as hard as paying for the ongoing expenses. Of course, that's based on usage, but I don't rent it out. I don't have partners. I have 2 full-time pilots, 1 backup pilot, and they're just on salary, basically on call. And so they've kind of become like family. They go wherever we go, and so they travel with us, and they're great people. I consider them part of our family. So
ROI, is it there for you? Are you already like feeling like, oh yeah, this has helped my business grow?
I don't even think of it like that, to be honest, Stu. Like, I couldn't do it another way. Like, I couldn't do what I do any other way. But certainly, like, we had a potential client in Atlanta who was referred to us, very big business, doing lots of business. I think he had at the time maybe 30 to 40 million in his investment accounts, and he was growing. And he said, can we jump on a Zoom in the next week? And I said, how about 4 of us on the team come to your office tomorrow for lunch? And he's like, what? I'm like, yeah. And so we go out there and we're face to face, have a great meeting, and he decides to work with us on the spot because we made that effort. And I think that's the kind of stuff that definitely, if you want to do an ROI calculation, then I don't know, we definitely make an impression by going face to face and making that effort versus just doing everything on Zoom.
Mm-hmm. So Chad, I read your book, listened to it, if I'm being fully honest and transparent, on my drive to Omaha, Nebraska with my son for a baseball tournament he was in.
Oh, cool.
And I loved it. And I just kept kicking myself, like, why didn't I find this book 4 years ago, pre-transaction with my private equity group when I sold the majority ownership of my business? And it didn't exist. This is a new book, Wealth Wired Differently. You wrote it, and it came out just in 2024. Is that right?
That's right. Yeah.
Yeah. So rather than me be the one to talk about all the things I gleaned from it, I'd love for you to share some of the key principles you teach in that book. And I'll share some. I might hit pause and we share some thoughts along the way that resonated with
Yeah.
me.
Yeah, for sure. That book, it was funny because it was really an idea of a client. And he said, it was a new client. And he said, you guys are very different than most financial people. Most financial advisors are very rigid in how they talk with us. Entrepreneurs, like there's a language barrier. Essentially, what he was saying was, I feel like a disconnect with the financial people I talk to. They don't get me. They don't think like me. They don't invest like me. They don't want to start other businesses like me. They just want to tell me I should put all my money in stocks and then like I should go away. And I understand that because my industry is full of a lot of nerds and they just are so rigid. And it's like the industry conferences are really silly to me because everyone looks the same, talks the same, acts the same. And when it comes to entrepreneurs, everyone's like your DNA is a little bit different in the way that you think and behave and take chances. And you can't take advice from someone who's never been in your shoes. I would never take parenting advice from someone who's never had kids. I wouldn't take fitness advice from someone who's eating McDonald's on the couch every day. And in that same vein, I wouldn't take financial advice as an entrepreneur from someone who has no clue about entrepreneurship. And so this book just really focuses on 7 advantages that entrepreneurs miss out on when taking financial advice from non-entrepreneurs. And that's really what the book is about, is we think differently about, you should be getting different kind of customized advice about tax planning, about cash flow, about starting new businesses, about investing beyond stocks and bonds, and just your career trajectory. I've got a client who started as a doctor. He was a successful surgeon. At 46, he said, I don't like this anymore. He took off the white coat, started a consulting business, kind of like a McKinsey type project management business for big companies. And he's got 1,400 employees. The company is worth a few $100 million. He loves what he does. And this guy was a doctor, and he gave up all that time and money that he invested in medical school and completely shifted gears and realized, like, I'm happy as an entrepreneur taking risks, building a business, creating new stuff. And had he just followed traditional financial advice, they would have said, that's crazy. You're throwing away all this money. You're throwing away all this time. You can't do this. You're almost 50 years old. Like, just hang in there, take it in the chin and just suffer through your career. But entrepreneurs need more, I guess, unique, personalized advice to how they look at money and business decisions. And that's really what the book's about.
That point resonated with me because when I started, I knew I was going to have a big payday. I'd never had 6 figures sit in my bank account for very long up to that point in life. And all of a sudden I was going to have 8 figures in my bank account. And that was almost a little scary, but super exciting for me. And then every time I'm like, at that point, 38 years old, right? And I'm sitting there across the table in my conference room from these financial advisors that I had invited to come and tell me about what they do. And they sniffed me out pretty fast, by the way. It wasn't very hard to set those appointments because they were coming to me, right? And the key theme was exactly like you said. They didn't speak my language, and they were ultra risk averse. They were like, we're going to do this 4% thing. I'm like, no. Like, I'm 38. I don't need and I still own shares in this business that is going to be worth more than the payday I've already had very soon. And I still have a salary as CEO for the next couple of years, at least, with this transaction. Like, it doesn't make sense to do what you're saying. And so after the third time of having someone come and tell me the same thing with the same ideas, I went, okay, this isn't going to be for me. I'll just find my own investments that I know I can get excited about, and I'll continue to take calculated risks and do what entrepreneurs do. And so that's what I did, but I didn't realize how difficult to manage it would be. And so I wished I had exactly what you ended up describing, which was the ability for someone to manage it, but someone to manage it that understands the level of risk I want to take, and that understands the types of diverse investments you can make outside of in private equity, in real estate, versus just in the public stock market.
Yeah, and that's tough because they're giving advice from an employee advisor perspective. So they're employees of a large bank, an insurance company, a broker dealer, and that's all they know. So they don't think, I mean, when they're giving advice, I've heard employee advisors talk about leverage and debt to business owners in a very restrictive way. And it's like, man, there's no way entrepreneurs would take that kind of advice if they're trying to grow their business. They don't think like a risk averse employee advisor. And so it is just a language barrier that just doesn't work.
Okay. Taking a quick break from the episode. Sorry to interrupt, but I have to take a second and thank the great team at Pod Allies that helps me produce this podcast. Startups with Stu is not an easy undertaking. It takes a lot of work and team power to get this thing done. So the team I use for my podcast, podallies.com, go check them out if you are considering a podcast. If you've thought you have a dream for a show and you want to go make it happen, go to podallies.com and book a strategy call today. I promise you won't regret it. I was 8 episodes published. I was on, I think, my 12th recording with a guest. And that guest was like, hey, I think I'd like to do a podcast. And I introduced him to the Pod Allies team. He's entirely satisfied with the work they're doing for him. That's the beauty of podcasting, right? Like, I'm not out there day in and day out selling podcasting services. I invested in podup.com, the parent company of Pod Allies, and it's been a joy to work with them, but I didn't have to go and sell this $36,000 deal that came from just having a guest on my show. I think one thing that people don't understand with a podcast is there's more value to be had than just likes, listens, shares, follows, etc., subscribers. You're going to get more than that with a podcast. And one of the greatest benefits is the networking that you can do through your show, getting guests on the show. Speaking of the show or shows, let's get back to Startups with Stu in this episode. Forgive my interruption, but if you're interested, go check out podallies.com.
So I got to ask, this was where I kind of got hung up in listening to your book was, okay, so Chad is a busy guy. He's bought himself a private jet so he can move faster and be more places. But like, he's the entrepreneur. His team, they're not. Or you do hire all entrepreneurs. Tell me maybe it's how you coach them and build them. But tell me about that.
Yeah, so they're in an extreme entrepreneur environment, and we only work with entrepreneurs. So they don't need to own Pacific Capital to give advice from the perspective of entrepreneurship and understanding it, because I've trained, coached, hired the people who have that understanding of just specialization and how entrepreneurs think. And so we have even assessments and things like that where we understand the personality traits of each client, and they're not working at a big, I guess, stodgy bank that takes a long time to innovate. So we innovate or we'll change software programs, and we'll do things that you would never do at a typical financial office, where they're going to say, we're going to take a long time to test this and implement it, and we're going to roll it out slowly. So they're in a fast-paced entrepreneurial environment, and they deal with me all the time. So they deal with all of our clients. So I mean, that's all they know. Yeah.
So,
I got referred. So here's an example, Stu. I love the NBA. I'm a big basketball guy, and I got referred to an NBA client. And to be honest, it was so tempting because, first of all, it's a big client. Second of all, I love basketball, and I'm like, man, that could open so many doors. And I sat on it and thought about it all day. And I was like, you know what? This player is going to leave us probably because someone else is going to come along that's a little flashier and more in the scene of the NBA scene and entertainment stuff. And I just felt like it's not going to be a long-term thing. And I can't say we're the best at serving NBA players. I just can't. And so I told this assistant coach, I was like, hey, I really appreciate it. I'd be so tempted to work with him, but I think we're not the best fit because we really specialize in growth-focused visionary entrepreneurs, and that's it. And he was dumbfounded. He's just like, I don't know what you're talking about, man. I'm trying to give you this guy. He's ready to meet. And I just said no. And I feel like staying true to your niche in any business it's hard to do because you turn away opportunities and money, but it really does make a difference. We're authentic, and that this is who we work for. This is who we. Now, if I'm going head to head against someone for an entrepreneur, like I will say, like, this is what we do. We are the best at that. But I can't say that with these other professions.
So what's been your main angle for growth? I know LinkedIn has been a strategy that's worked well for you. So I'd love for you to talk about that. But what are the main ways that you've been able to spread the word and grow Pacific Capital?
I would lump a lot of it together with content. So, writing 2 newsletters a week. We've got tens of thousands of people on my newsletter list. I post on LinkedIn every day. I didn't do it this morning because I got in so late yet, but I do that every day pretty much. Active in a lot of different, connecting, networking, mastermind coaching groups. I have my business Platinum Elevated, where we coach business, growth-focused entrepreneurs, visionaries. So we have a mastermind that I created a couple years ago. Just being out there, I would say, writing the books, probably on a guest on, I don't know, maybe 60 to 70 podcasts a year. And it's hard to say. I don't think there's like one strategy that works a lot, but just over servicing our current clients leads to introductions, and then putting our messaging out there that's very clear. It really does attract the right type of clients when you're clear about who you serve best.
Yes, it does. So every day on LinkedIn, you've had haters along the way. I'm sure if you're posting that frequently, how do you deal and handle with that part of it? Just quit caring what people think? Is that the answer?
Yeah. No, I have fun with it. Like, the haters are more on Instagram than on LinkedIn, and Instagram is just more for fun. But I mean, it's all day, every day. People just saying ridiculous things. I'm sure this is all they do, but it's one of them said I look like a microwaved Ken doll. I thought that was kind of funny. Last night someone said, you have that much money and you can't fix your hairline. And I was like, I think my hairline's not that bad, actually. I don't know what they were talking about, but
I think it's great, Chad. Chad, you have a good hairline, bro.
Someone yesterday said, imagine buying a jet because you can't have a decent personality. And so I replied, then I said, it's way easier to buy a jet. Or someone said, like, they said, or whatever you're selling, I'm not buying. And I said, you are not my target market. So, like, I just have fun with people. I don't really care. I stopped caring what people think about me a long time ago. I try to be nice and friendly, and I try to help people. But if you get caught up in criticism, you're going nowhere. So I'd say like 7 years ago, I just decided I'm just going to be very transparent and open. It is kind of a give up of privacy, but whatever. I just put it out there, and some people like it, some people don't. That's okay.
Yeah. You're playing your game, and your game's working. I love seeing it. I also love the light you share to the world.
Thank you.
Pretty unapologetic about sharing your faith and your family. Yep. And I love seeing it. Okay. Let's step back. To 2011 when you're starting Pacific Capital. How old are your kids, and how many kids do you have?
2011, we had 3 kids. We have 5 now. My kids were, I guess, 6.5, like 4, and 1.5. And I was born in January of 79, so someone else can do the math. But yeah, I mean, we had a big mortgage and a big house, and it was very scary at the time, and it was a young family. So it really did seem like taking one of those big bonus checks would have been the smart thing to do financially. But my gut just said, I got to go for this. And so that's what I did.
So do you talk openly about your revenues year over year, and where you're at today, assets under management? Are you open to talking about that?
Yeah, I talk more about assets under management and then all the other businesses that we own. So we started I grew my clientele to 330 million at Merrill Lynch, from 0 to 330 million in 8.5 years, which was a great thing. And then I started over. And our industry is really strict about soliciting clients. So I really did start over. A few of them, because I sourced all these clients myself. So like a lot of them just stayed there, but a few of them did eventually follow me. And I'm now responsible for investing about 1.45 billion. Pacific Capital has allowed me to not just learn how to be a great business owner, have my business become self-managing. So I don't just have a job, like my team runs everything. And it's allowed me to start other businesses that I'm excited about, like Platinum Elevated. The Draft Sports Complex is a sports business that it's not 8 figures a year yet, but it could be. And it's, we have 12 courts, basketball, volleyball, but we started 2 clubs, and one of the volleyball clubs has like 58 teams, and it's become really successful in the junior Olympics and stuff. So that's a great business I'm excited about. So in that book, like I listed, here's 25 sources of income besides Pacific Capital, because I think what people get caught up in is they think most financial advisors they talk to literally have their job as a financial advisor and that's it. But I think entrepreneurs appreciate working with someone who is like them and looks in different areas to make money in different ways. And so I've been heavily invested in real estate since 2008. Here's one thing I'll share, a money insight I'll share, is that I think diversification is not a way to build wealth. Too many financial people out there talk about diversification, like multiple streams of income. I actually think that's foolish until you already are wealthy. Concentration builds wealth, and diversification preserves wealth. And so do not diversify and set up all these other types of investments and sources of income until you already have a significant amount of money. And I would say that's probably at least $10 million. Then it makes sense to start diversifying and spreading out. And so most entrepreneurs concentrate on their business, and that's where they get the biggest outcome. And then they can spread out and start doing other things to preserve their wealth. And so for me, that's the same story as most entrepreneurs: concentration first and then diversification after.
I've told a lot of founders that have come to me, once you've had a payday and people know of your successes, they want you as a mentor. And one of the things they've asked me about is focus. And I'm like, you have to think of yourself like a lion chasing a herd of gazelles. You're going to have all sorts of ideas. Every entrepreneur does. You need to pick the gazelle that you can eat. Go kill it, go win there, and then you can go focus on the next one. But you've got to go all in.
Book number three is called Beyond the Money. And that's really how to think about money, business, and life after you've made some decent money. I think people really go back to it's almost like you have a payday and then you go back to you revert to your habits and you start over doing something exciting and new again, but you keep the same mentality that you did because you only know that one way. And so it's really time to think differently once you have some resources behind you.
Absolutely.
So, but yeah, everyone's going to come after you. If they know you're successful, I mean, you're going to get hit up all the time with opportunities and ideas. And I love Utah, Idaho, and all those places. I visit there. I have lots of friends there. But I'll say this, there's lots of people who are like, they get caught up in the get rich quick stuff and they hear something that sounds amazing and they don't read the fine print. And, maybe your money is stuck there a lot longer than you expected. It's illiquid or it goes down in value a lot easier. But people are so enamored by being part of the club and putting money into something because lots of other guys are in this and they want to be part of that club, but it's often not a good financial decision. So we like to help clients filter out as much as possible and just protect them from making decisions that are emotional rather than objective and smart.
So are you saying that you guys will help in a due diligence process if someone's looking at acquiring a private equity deal?
We do it every single day.
That's so cool.
Yeah, in fact, I'll tell a quick story. We had a client say that they were very excited. They had put $1 million into this business before they met us, like maybe 2 or 3 years ago. The business had grown. It was doing $55 million a year in revenue. They were looking for more capital. He was close personal friends with the CEO. And he's like, I'm going to do another $1 million. I'm going to do a follow-up $1 million. And said, well, can we look at the term sheet and everything else? And so we went through it. Our investment committee went through it and just saw some things that we didn't really like. And we just advised against it. And we said, look, it doesn't seem like this is a great investment. It doesn't seem like you have many protections in place. If you're going to insist on it, we would ask you to talk to this attorney and change terms, but it just doesn't seem great. And he said, well, the guy's putting pressure on me. And we said, use us as the scapegoat. Tell him just my financial team says it's not a good time for me. And we'll revisit this in 6 months. And so he did, and he blamed it on us, which we took the blame. So it wasn't awkward with the two friends. Well, a week later, they filed for bankruptcy, completely fired every single employee, filed for bankruptcy. And then this guy had embezzlement charges, the CEO, who was like one of his best friends. And he says, this was a couple years ago, but he says, to this day, I just am so thankful because I was like absolutely all in on this $1 million. And he casually mentioned it in a meeting with our team. And I think that's the challenge, is that we get caught up in relationships and what's exciting and what the emotions of it and what it could be, the potential, that we don't do our due diligence objectively. And so having a third party to do that definitely makes a difference, and it protects our clients from making bad money decisions.
Well, the conversation flowed us away from the kids and family fast. So I want to go back there.
Sure.
I think there's this message that the society shares that you got to grind and hustle. Entrepreneurship isn't family friendly. You can't be a family man and a good businessman. You see the stories of billionaires that are on their third wife, but it's worked out for you. And I love seeing your posts with you and your wife after she's run a marathon, or you guys are in Croatia. It's so cool to see. I love that. And it's easy to see that you guys are a team and you work together. I raised my kids when I started Stu Kent in 2013. They were, my oldest is now 17. So he would have been 6 at the time. And my kids have watched me grow with the business. My youngest, she probably won't even remember the business because I had her when I was 5 years into it already. So her first 5 years of life, I was running Stu Kent. I found that I could do it, and that my kids still do love me, and my wife still loves me. You've pulled it off. What are some of your secrets to success, and how have you involved your wife in all of it?
Yeah, that's a great topic. Great question. I strongly believe that you can win in business and win at home at the same time. I wrote an article that went viral for Entrepreneur magazine. I think it was 2 years ago, maybe. And it was called The Hustle Culture is a Lie. Why the Hustle Culture is a Lie, something like that. Because I love the motivational guys, and they talk about, you got to be willing to give up sleep. You got to give up this, give up that. And I'm not inspired by financially successful people with broken families. I don't not love them. I love everyone I meet, but I'm not inspired. I don't admire that. I don't want to follow that. Like, I want a strong core family. So my wife and I have 5 kids. Our oldest she'll be 21 this year. Youngest is 9. And I think what I realized early on is I can do this right in home and at business, but there's got to be some sacrifice somewhere. And that sacrifice turned out to be just personal hobbies of wasted time. And so the last TV show I ever watched was the last episode of The Office. I used to love The Office. I don't remember what year that was, but it was a long time ago. And that's the last time I turned on a TV. I watch maybe one movie every couple years. I've never logged into a Netflix account. I don't have Netflix, never seen anything on Netflix. And so I'm either going to be a negligent dad, negligent business owner, or just struggle in all these areas if I keep these vices or time wasters. And so I just decided to give those things up. And I was like, I've just got to be better with my time. And when I'm at work, I'm really going to work hard. When I'm home, I'm going to be focused on going to the kids' games and practices and being there for family dinners and all the church activities. But I'm just going to give up all the other stuff that could suck away my time for my health, my sleep, and just my focus. And so for me, it's been priority management and just being really intentional. And it's not like, oh, well, yeah, it's easy to say that now. I had to do that back then. And so it's been a long time since I've been, I guess, in a lot of entertainment stuff. Now, if it's going to a game and I can bring my kids or bring a client, then I will do that. Obviously, if I'm going to go to a sporting event, it's going to be either family or business focused, and it's going to be something I'm investing my attention in. But I think that there are not a lot of role models that are really financially successful that also have a strong family. And so my goal is, and that's what I share a lot on LinkedIn, is that I want to encourage that. I think strong families are the foundation for strong businesses. And so our Pacific Capital, I changed our office hours a few years back, maybe 5 years ago, to be 8 a.m. to 3 p.m. for everyone here. And we have, not everyone here is faith-based at all. We're in Southern California, but like people are so appreciative. They have a real family life. They pick up their kids from school, and most financial firms are like 7 a.m. to 5 p.m. or 7:30 to 5:30. I just looked at that. I said, let's look at the call log. Like, what percentage of calls are from 8 a.m. to 3 p.m.? And it was like 89%. So I said, what if we just tried it? Let's just experiment. Everyone be super productive between 8 and 3. Like, don't get on Facebook, don't get on social media, like focus on your work, and then get out of here at 3, shut the office down, and go be a family person. And let's just see if productivity is high and if clients are okay with it. And we've never looked back. And I tell you what, it's a great retention builder. People have learned here to experience some of that freedom that I created for myself, even as an employee of the company. And so they really take their work seriously. They come in, they work hard, they do what they got to do. And then they go home and they coach their kids' baseball team, or they go to the beach, or they go to the gym, and they're active in their personal life. And so, yeah, I think it came from a book I read called The 4-Hour Workday, for like the surf shop in San Diego that changed their hours, shortened their hours, really focused on employee engagement, and productivity went up, revenue went up, profit went up. And so I decided to try it out in my own way, and it's worked out. But I think it's very important to have family relationships that you care about, and that you'll show up better in your business if you do.
I love that. That's awesome. Super, super cool that works for your business. As you have spent all this time now with all these ultra successful entrepreneurs, and this will be my last question because I know we're going to run up on time here. What are some of the key things you've noticed, the things that are similar among all of them that make you go, oh, that's what makes them tick. That's why they're so successful.
That's interesting. Because we work with some people that are, they've started a business from scratch and it's worth $3 billion. These people it blows me away, right? The common traits I see, number one, they're super disciplined. They're disciplined in many areas of their life. They're not like, they don't have a sloppy personal life. They're very disciplined in all areas. They have big goals. They dream a little bit unrealistically. They have big goals. They just think bigger. They are all givers. So I would say maybe 25% of my clients are also LDS like me. So 75% don't have a religion, or maybe they're Christian or something else. I think like 95% of them give to their church, or they give to charity in a significant way. And I thought that was surprising to me. I just didn't expect that. So these people, what it tells me is they have an abundant mindset. They're not trying to like hold on to every dollar. They don't hoard it. They give. They're generous givers. And so they think that they can create value and abundance and wealth anytime. And therefore, they just constantly have that mindset of like, who can I help? Where can I give and make an impact? And so that mindset of big goals, abundant thinking, being intentional, being disciplined, but also being a generous giver, those are traits that I find in pretty much every client I have. And they care about their people. They're all just really, really good to work with. None of the clients we have today are, just big egos or selfish, or they put people down. We don't work with people like that. And I find that it's interesting. Like, were they nice and generous once they got a lot of money? I don't think so. I think this is who they were always.
That is something I've tried to always pay attention to, and a reason that I've read a lot of biographies is because I think you can find some common traits among them. And I think for most of them, they were givers well before they had, maybe percentage-wise, they were similar in their giving, but they were always a giver even when they didn't have yet, right?
For sure.
Chad, thank you so much for taking time to be on the Startups with Stu show. That last 3 or 4 minutes has so many golden nuggets. I hope people will stay and listen to the end of this one. And I wish you the best, and I look forward to seeing you at another Cougar basketball game in the future, bud.
Awesome. Thank you. Thanks, guys. Thanks for listening, and hope you guys have a great retreat there.
Hey, founders, entrepreneurs, investors, and other listeners of Startups with Stu. Thank you for listening to this episode today. As I mentioned at the beginning, as I mentioned in the middle, I want to take a second again at the end and say, if you haven't yet and you're considering a podcast, go check out podallies.com. They sure help me a lot with the show. And I am so grateful for all that they do to help me accomplish Startups with Stu and get it out to the world so we can help more founders and take your startup to the moon. Go check out podallies.com and podup.com if you're interested in podcasting at any level.
Thanks for joining me on Startups with Stu. We have big goals to help millions of entrepreneurs. If you enjoyed this show, please take a minute to share it with someone else that needs to hear it, or leave a review. Remember, success is within reach for those who dare to dream big and take action. Until next time, keep pushing forward on your entrepreneurial journey.